Welcome to the Digital Lending Roundtable, India. We have many illustrious speakers today. I wouldn't want to take from their time. However, just to give you a background, the Reserve Bank of India has recently constituted a working group on digital lending. Uh, this came in the background that in India, digital lending is presently everywhere. You have millennials ordering their food online using pay later option. You have people who place requests for pure based lending to buy a goat. You have MSMEs who are really looking forward to digital lending so that lending becomes more cash flow based rather than collateral and security based. So, it's literally everywhere. This is one end of the spectrum where suddenly access to credit has opened up for all and financial inclusion has become a mantra. But at the same time, we very recently we had FIRs filed against lending apps that were apparently working without the necessary registrations. We had an exodus of lending apps being unilaterally removed from app download locations. The app download service provider had to take this step as a matter of self regulation because they were apps that were causing serious harm to its consumers, literally hijacking their phones. And so presently, I think every change is somehow tumultuous to say the least. And we are at the cusp of change in digital lending in India. And so we've invited speakers to address us on this topic so that we get a better understanding of how digital lending works, how they've seen it evolve and blossom in other jurisdictions, and how India can take note and on the way forward in the digital lending space. On that note, I would like to request our opening speaker. The opening address for today is going to be provided by Mr. U.S. Paliwal. Mr. U.S. Paliwal, thank you so much for accepting our invitation to address our audience today. Mr. U.S. Paliwal is a former executive director of Reserve Bank of India, and he will be addressing us today on the importance of tech-based lending for digital India. Mr. Paliwal, I would request you to please commence this digital lending roundtable with your plenary address.
Thank you, Kritika, and a very good afternoon to all. And my special thanks to AK and partners and all those who are attending in these trying times of COVID, the second wave. Uh, so I'll just begin with the background. Like what Kritika very rightly said was that some of the lending which has happened in the fintech sector and the downloads and others which had to be removed and all. So I'll begin with that word of caution and then proceed with the preliminary session and the opening remarks. Please do whatever is permissible by the law of the land. Do all innovation which is within the purview of the regulatory framework, both of the regulator as well as with that of the government. Because that is the purpose. Ultimately, if we are working within the framework and wherever we are in doubt, it is better to seek the permission from the regulatory authorities. That is RBI in this case, could be the government, could be the MCA, could be any other agency. Uh, so, with this small advice and the short advice, but very pertinent to all, I'll just say that okay, how has the market evolved over a period of time? Initially, if we go back in the prior to the fintech sector, it was basically all thing was a paper-based one. People, as we know, will have to go to the bank. They will have to submit the checklist of the documents. Some of the documents could have been like old. Another checklist would say that okay, you bring this, you bring that, and in the end, it was more of the visits many a times and the transaction cost involved in terms of meeting the physical bank or the lending institution was itself at times irksome, at times quite time consuming, and certainly that was also one of the areas which required a small irritant. Technology provided a change. And how did it change? For the millennials and all, probably those days of literally looking at the old phones, the wired ones, is that of a bygone era. Now, what has changed is, like, say, the mobile itself becomes an app, it becomes the bank, it becomes you, it becomes your for EKYC, for all the documentation. The artificial intelligence is looking at it. And instead of, like, said, certainly the Credit Information Bureau, the agencies looking at it, the credit score and all are all captured. But then we are also looking at the new players which have come in. Now, with this background, what are the lenders looking at in the post COVID scenario? If we look at the first wave and then the second waves, unfortunately, our country is the most affected right now. So, does the demand for lending or for money comes down? Probably no. It might increase for the simple reason the requirements go up, not only for the necessities and for the productive purposes, but also not that everyone has an health insurance, or even if they have it, they might be requiring it. Here, I'll just like to ask one small way, rather suggest one thing. Usually, whenever we are talking of the digital lending and the platforms, and then the other thing looks like to be the orthodox banking of the brick and mortar and the cash. Let me be, I'm very clear about it. Uh, each one is entitled to their views. What I feel is that both are complementary to each other. Because even when the digital lending is happening, there is a cash out happening at some place. So rather than taking them as purely competitive, it is complementary to each other. Each one is complementary to the other. Now, maybe for certain sectors, because the we find that services sector is impacted, malls are closed, shops are closed, essential services are available for next time. So for to that extent, yes, the demand might have come down. But for other areas, like say someone has to buy a computer, someone has to do an online classes, someone has to do the online shopping. For that also, we might be requiring computers, we might be requiring laptops, we might be requiring smartphones, we might be requiring even ordinary phones. So with all that, there is a requirement for medical, there is a requirement for education purposes, which is perpetual. Shift might have happened, which I feel is temporary, because COVID is also going to be certainly a very trying phase, but certainly will pass. Now comes the online access which we are able to get. And on the online access, what happens is that earlier what was being done in a paper mode, the phone, the computers are able to do it. And it doesn't require much of an elaboration because all of us are the users of it on a day to day basis. The advantage which the digital platforms and the uh, some of the physical ones also, a combination of the digital and the physical, will also provide the minimal paperwork. Aadhaar card can be loaded, PAN card can be loaded, address proofs can be given, photographs can be loaded, income proofs can be provided, the business or for the activity for which we are looking at, my credit score I can upload. And these are the things which are the enabling factors. And that is where the regulator, the technology, the government, and the user all have come together and they are able to provide that necessary inputs for enabling, and they are the enabling factors. Now, what's the flexibility which we are getting into? Flexibility is usually there was earlier, like say, okay, an X amount of loan is the minimum below which it may not be physically viable. When the government is looking at financial inclusion, the RBI is looking at financial inclusion, the people who are either dispossessed or partially at a disadvantage, or they were borrowing it from the informal sources which were providing the credit, but certainly at a very, very high rate, at times obnoxious. Whether for a very small amount of 1,000 rupees someone was willing to lend, But if they were willing to lend, what were the rates of interest being charged? And what were the risks at which they were being charged? Daily, monthly, or yearly? So the digital platforms have provided the flexibility of the amounts, flexibility of the sectors, flexibility of also looking at that what are the, not necessarily always for the so-called productive purposes, might be for consumption purposes, might be for someone wants to go to a movie, someone wants to eat popcorn, someone wants to go out on a very short picnic. Uh, Fortunately, that unfortunately that cannot be done in the times of the COVID. But that is where the demand is there and will be coming in. So the amounts could range anything, if you ask me, from as low as 5,000 or even 1,000, could go up to 1 lakh, could be going up to 4 lakhs, 5 lakhs. MSME sector is another one which can be provided with this. Now, this also helps in the government's aim, objective with the various schemes of the financial inclusion, uh, being the backbone and also the objective group which we are looking at. So what we have to do is that we have to look at that what is the alternate source which the digitals are providing. The digital platforms are providing the turnaround times. The advantages are that the artificial intelligence, the data points, the all the inputs can come in, the patterns can be evolved, and then whether it is the pin code, whether it is the gender, whether it is the basis the occupation or the requirement, or even the in a month, what type of the, like say, which phase we are in, which we are first to the first 10 days, or we are in the last phase of the month, or we are in the first fortnight or the second fortnight. That can also determine it. And I think the best part which the digital platforms, in addition to the ease of it, is that the turnaround time has been really cut short. Each one will have to operate, and they are operating as per their business model. The my word of advice to all would be, again at the cost of repetition, is certainly the technology is enabling us. They are providing us the best of the resources in terms of what we have as a phone with us. Doesn't require anything more than that. If we can just put in the uh, fill in the formats, provide in the necessary information, the decision taking is much, much faster. And if you really look at the decision making, which is happening in a very turnaround time being reduced drastically from, say, months to weeks to now, in saying that, okay, uh, maybe within a day, at times, couple of days, at times, even reduced to an hour or less, depending upon how the input of the data which we have provided is being churned, is being used, and how the discretion is being taken, and what is the risk appetite of each platform and the model and the business which they are undertaking. Manual costs have come down, and fintech lenders are also able to keep the nominal fixed costs because, and especially so if we are looking at work from home, which might become more or less of the norm for a very large percentage of the work, which does not require a physical movement and a face-to-face interaction in the coming times. So that would be also the change in the environment. And the last thing which I'd like to bring about is that it is not only looking at purely the productive purposes, but also looking at the consumption and also the lifestyle aspirations. So long as there is an ability on the part of the borrower to repay, and the ability on the part of the lenders through the digital platforms, keeping in view all the regulatory government norms in place in mind, taking the approvals, I think it's going to be the game changer. And as I said, in the end, I would like to just conclude that though majority of the speakers, the general environment thinking, the academicians do think that digital world and the physical cash world are apart. Uh, I personally believe that they are complementary because at some point of time, the cash is getting converted into onto the digital platforms. When it is the cash out, also it is happening the other way around. With this, I would like to thank the organizers and all the attendees and all the speakers for the various sessions which we are going to have. And I wish all the very best. And uh, let's hope that we will be able to come out of COVID as a nation, as a community, as individuals, and as the family very fast out of it. Please stay fit, stay secure, and enjoy the seminar and the webinar. Thank you very much.
Thank you, Mr. Paliwal, for that very enlightening address. We completely agree with you. You know that it's a misnomer that people say that, oh, with COVID, the demand for lending has completely dried up. And I think you just completely set the stage for our next panel, because you gave us some very important keywords to think about, like lifestyle aspirations, some of the key things that are really driving the digital lending wave in India. Thank you so much, sir, for your kind address and for sparing the time to address us.
Thank you, and all the very best.
Thank
Thanks
you,
a lot.
sir.
Okay, I just have a
Yes,
prior
sir.
commitment, so I'll be not able to attend the entire one, but all the best wishes for that. Thanks a lot.
Thank you so much, sir. Thank you so much.